Thank you very much. Good morning, ladies and gentlemen. Thank you for making the early morning slot and listening to this. I'm hoping to showcase West African minerals in about 9 minutes. It's a bit of a tall order. And then for those of you that are already invested and haven't listened to me before, to provide an update this morning on some of the exciting stuff that's coming out of the development of our project as we march towards an early startup, early cash flow pathway to production. Next. Just a reminder that I might not be telling the truth all of the time this morning. We're an AIM-listed company. We have a market cap currently of about 23 million, and importantly, we're funded through our current exploration program, currently with a cash balance in the bank of about $12 million. Our land positions that we're most interested in, we do have some lease areas in Sierra Leone that we're working, but we're most focused at the moment on the emerging iron ore corridor in Cameroon that we like very much. What you see on the eastern side of the map in front of you, on the right as you look at it, is the large hinterland deposits, as we call it. These easily rival the iron ore deposits that you would find in the Pilbara or in the Carrie-Chasse, world-class deposits. They are unfortunately about 600 kilometers from the coast, and they will take some effort in terms of infrastructure before they're brought into production. Importantly, as you can see on the map, are lease areas of Binga and Senega that are close to the shore on the left of the map. These are the ones we're most interested in currently. These are the ones that have good magnetite deposits. We're busy doing a lot of geophysics and infill drilling on them to prove that we have enough resources to have a startup production, and we've just completed a MET study on them. And here you can see what I've done on this map is I've put circles with 100-kilometer radii on them to show the proximity to the emerging port of Kribi. And here you can see the cluster of resources around that port that I think are most important. These are the early starters, the early movers. All of these leases are likely to produce in the order of 3 to 4 million tons per annum as they reach full production, and they're all likely to utilize that emerging infrastructure around Kribi. This is one of the best places on the African coastline to put a port, because you can bring very large vessels to within 1.5 kilometers of the coastline. So your economy of scale for sea freight is very low, and your capex is extremely low. Your jetty system is only 1.5 kilometers. Importantly, on this picture, you can see with the purple color or the mauve color, you can see that Jindal have bought Legend recently, and that's a fairly significant move, a deposit we think of around about 250 million tons, running at about 30% in situ and can be upgraded to a 62% product. This is a big move. Jindal are a steel giant in India. Also in the maroon color, you can see Sino Steel. They are active. Again, they haven't published any resources, but we believe that they have about 600 million tons in their Mamelles deposit, running at about 30%. And then recently in the green, IMEC, who have just bought the Afro deposit. And that cluster is very, very important to the startup production together with us in the orange at Binga. I also want to mention at this point Senega, which is just slightly north of that cluster. And this is where we've had some incredibly good news over the last 2 weeks. Been running a field operation there, low-key mapping, and it's come back with consistently high grades from the surface. Important to all of this is that the infrastructure is actually real and going in, and Cameroon is very committed to a 2015 plan for having all of that infrastructure, and importantly, the energy that goes with it all in place. In these pictures, a lot of them were taken in April last year. You can see the container port that will be complete, and the first ship will dock in June this year. There's an opportunity for us to utilize that as well, using Panamax as an even earlier startup. You can also see in the bottom right the gas-powered station. This operates off a gas field that's both near shore and onshore, all the way between Kribi and Douala, and currently operates at about 215 megawatts. And it taps one well of 25 planned wells. So there's an opportunity for another 24 of these wells and a well-established grid to feed into. So power, infrastructure there's no shortage of, and absolutely on our doorstep. The key to our success as we see it over the next couple of years is to drive towards feasibility studies, to bring early production into play, and to use that cash flow to drive the corridor. And that's the key strategy. Getting cash flow positive as soon as possible with small-scale production from our Binga resource, and then applying that back into the infrastructure development along the corridor to access the more compelling deposits that we know lie towards the hinterland. We see that happening literally in 100-meter chunks, and we see it going hand in hand with a very intensive play of exploration as it develops along the corridor. This is the road infrastructure that the Chinese have built, another power source coming in from the Intem River, which is the Sino Hydro's project on the drop-off between the escarpment and the coastal plain on our Binga lease. And rather fortuitously, this road is built right through the center of the lease and giving us good access for our exploration, but also importantly giving us good possibilities for trucking options for early startup. Just a recap on Binga. This is our Binga lease's aeromagnetics, and again you can see the large pink ribbons. There's about 60-kilometer long strike length of iron ore, of magnetite. We did the aeromag and then filled it in with about 5,000 meters of drilling, proving consistently that the banded ironstone formation exists across the property. And we've subsequently gone in, you can see the small little black blocks, and done what I call test blocks for infill drilling to produce an early resource. And if I hone in on them, you can see these are blocks 6 and 7 right on the western side of the property. This gave us a startup resource of about 30 million tons. We're looking through this year to bring that up to about 100 million tons so that we have 10 years at the production rate of 4 million tons per annum. We don't want to over-drill. Drilling is expensive, and we'd much rather get the production going. We know that the persistence of resources is there. And you can see from the blue lines the opportunity that we have in this year to first do ground geophysics and then to do infill drilling to bring up that 100 million tons. And you can see again around Block 8, the results we got from Block 8 particularly compelling, and we'll go back and infill drill this in the rest of the year. So the quarterly work program that we've laid out for the year is on track. We've just completed the first quarter's MET results and announced that. Very happy to say that we, exactly as we thought, we can upgrade our 30% magnetite to a 62% product or better. And that's with low energy, so we can do that with a small amount of grinding and a small amount of milling. Low retention time in the mill, importantly, so we have low energy costs. And all of that indicates to us that we're in line with our forecast for OPEX of around $55 to $65 per ton, in that kind of range at this stage, which allows us, in terms of a long-term view of the iron ore price of $100 per ton, to create a 30% margin. Importantly, with a low capital cost, to be able to have a payback of around 2 to 3 years on our project. So that's all working. We then, in the third quarter, we're going to move on to ground-based geophysics, a recipe that we've developed with some of the exploration we've done on the other projects, where the correlation between the drilling and ground mag and gravity is very, very close. And that allows us to prove up. We're trying to have about 150 million tons in a footprint, and then it will accurately decide where we drill in the third quarter, and we will produce a preliminary economic assessment which ties all of that exploration work, all of the metallurgical studies, and all of our scoping studies on cost for CapEx and for OPEX into a plan for action. And with a stretch, we will be able to start trial mining in 2015, and potentially towards the end of 2015 to start our first full-scale production. This is a result of the MET tests, importantly at 106 microns, which is about 1/10 of a millimeter, still a fairly gritty texture and low retention time in the mill. We can produce a 64% iron with low contaminants, very low silica, very low phos, and that's exactly the type of specs that the market is looking for with our product. And here you can see what, in thin section, what it looks like The magnetite is what we're trying to break away and separate by way of low-intensity magnetics in the processing. This is what the ore looks like, and this is what the product looks like. The white is what we don't want, the gangue. We've been able to separate that, as I said, with low magnetics. The black is exactly what we want and exactly the right percentage iron to be a very well saleable product. Just a diagram, you'll see this in the brochures I have at the booth. And then the sort of jackpot news for me of the last 2 weeks, the field team operating on our Senega lease. We've left this on the back burner to focus on Binga and to focus on our lease right next to the emerging port. Senega is next to the existing port of Douala, so it's a river port. It will have a limited capacity in terms of the ships we can bring in. But importantly, it's fed with an existing railway line that runs right next to our lease. And the team have just come back, and you can see the southern tip here, a large red blob, and red is good in terms of geophysical signature. They've been mapping on top of that, and consistently over a very wide width, importantly, and a very fairly long length of about 3 kilometers, got really good surface deposit samples back, ranging around 60%. So this is very good news. This gives us a second prong to an early startup, opportunity perhaps to start on Douala, where or at least on Senega, where we will have probably the best stripping ratios we're likely to encounter right through the district. No, that's just a surface sample, Gabrielle, so that, you know, we've still got to go and drill that for depth and find out what type of magnetite underlies that. Just quickly to wrap up, these are our regional targets that we've gone and done surface work on over the last couple of months. To the north of Jadom, that you can see in the north of this map, are very compelling regional targets that we will get back to. We've gone and done a lot of surface sampling on these, all coming back with what we expected. Importantly, we will only get to this in the next couple of years, because we will focus on what's close to the shore. But we know we have them in our back pocket. Equally compelling on Lely is a pretty large deposit highlighted by the yellow arrow on the map. We like Cameroon a lot. I've said this before. Very stable country, a country with a plan. Every minister in the cabinet sings off the same hymn sheet in terms of their vision. That's important to us, and we can see the action actually happening in terms of the energy, their number one priority, and the infrastructure, their number two priority, actually happening on the ground. We have a very strong board, well experienced on the mining side and also on the investment front, notably Brad Mills as our president and Jim Mellon, who's here today, as our chairman. These are the takeaways, really. Exposure to African iron, strategically located assets right next to where the port infrastructure exists and is coming in place, an experienced management team, strong government relations, and this really works in our favor. We are very much inside of government's plan to initiate mining in the district, and we have a favorable outlook on iron being retained in the range of $100 to $120 per ton. Importantly, we will pitch our projects always in the lowest quartile of the cost curve and retain the 30% margin so that we get the fast paybacks on what we're doing. Right now, we have an early cash flow opportunity on Binga, and quite probably before the end of the year on Senega, and this may turn out to be our real star in terms of Cameroon. We have an emerging satellite value at Lely and at Jadom North, and we have several other prospects. Certainly hope to put out a lot more news both on the development for geophysics and infill drilling on Binga as we develop our PEA towards the end of the year, but then also on what's happening on Binga as we start to probe the depth of the 60% stuff we're seeing on the surface, and also have a look at the opportunity for bringing that into production. Thank you very much for your time, ladies and gentlemen.